So here's the chart of Lucid. So I was mentioning the other day that the stock of Lucid, or the chart of Lucid, was indicating that the relative strength index was going to push it down, was going to push price action down. And so we had our entry price at $14.36. So what we do when we look at the relative strength index, we have to look at either support or resistance, depending on the prediction or the indicated price that the stock is going to move. So in this case, Lucid looked like it was heading lower. So what we do is we connect this low pivot right here and this pivot right here and create a trend line using those two low pivots. And this gives us an area of support. So this why my target of $14.36 was my entry price. It wasn't some arbitrary number. It does show you that, all right, well, based on the fact that this is continuing lower on the relative strength index, it does favor a move to the downside. Once you get oversold, you are due for a bounce. You had this big sell-off on the 4th, so yesterday. Big sell-off. Look at the relative strength index. It didn't get below the 30. And then what happened? Got close, put in a little bit of positive RSI divergence. Price action headed down. Relative strength index headed slightly higher, oh so slightly. And then there was a huge reversal on Google. And then all of a sudden you were trading above the 50 and into the 70, indicating that you're overbought. However, based on the lack of price action in here, this indicates that this is a momentum stock, so it's going to continue to float higher. Now, some people say, well, why don't you go long when you see the continuation play? The relative strength index, for me, it gives me an idea of, like, if I'm in a trade, how to maneuver through it, if I'm going to exit a trade, or if I'm going to add to a trade. If it's a continuation play, I'm going to go ahead and leave it alone until I get more capitulation in the stock, right? Because just because it looks like it's continuing higher doesn't mean that it can't just continue or just make a turn and head lower. So for me, I like to wait for additional resistance. And so you guys knew my level was $232.56. And look at this, $232.56 was what it hit after hours yesterday, and then got a little bit of a pullback. So today that level is no longer on my radar. I don't like the $232.56 level. What I'm looking for is an entry price at $235.02. That's where I would enter this trade. 235 Pierce, essentially on Google, for an entry today. It does favor a move to the upside based on the fact that it never got below the 30 and stayed above the 50 and 70 for most of the day. So this is a strong stock. So I would wait to short it at 230. Look at this price action. I did have an entry price at $150.30. Unfortunately, never got there. But look at the relative strength index. It's starting to put in continuation of negative RSI divergence. So what I would like to see is CRDO head all the way up to $150.30. It could just stop at this upsloping trend line before it gets to $150. The $150 level for me is a more of a psychological level, especially if we can pierce the 70 on the relative strength index. And then we put in a green bar candle, hopefully closing with price action at the top end of the chart. That would be an ideal entry at $150.30. Now, when I say that I'm looking to short this, I'm not saying that, when you get into this short, all of a sudden you can let it go down and it's going to go back down to like $20 or something. So when I'm mentioning $150, this is a great day trading level and a possible swing trade level. Based on the price movement, you can actually get a pullback to right around $125. So that's where I would enter a swing trade. On a day trade level, I would enter this and look for like a $3, maybe a $5 pullback, not necessarily wait for a $25 pullback like I would with a swing trade on CRDO. All right, AEO. AEO is another stock on the daily time frame or intraday that stayed really, really, really strong on the day. It had some volatility at the beginning of the day. As you can see, you had a nice 5-6% pullback. Intraday 5 to 6% pullbacks are actually what you like to see. It never created negative RSI divergence. What I would have liked to see is if this price action would have pierced this $18.29 level in the morning hours, this would have been a great entry for a short. But because the relative strength index, although it did hit 70 and never created negative RSI divergence because you had a higher high here and a higher high here. So unfortunately, that was not a trade. And then it just continued to float higher. So for me, even though American Eagle Outfitters was up 17%, I still think that it can get up to $20.54. So that would be this gap fill right here that it needs to retrace to. Now, it could pause right here at this gap window at the low end of this green bar candle. So if you were more aggressive, and this would be more of a day or swing trade, if you're more aggressive, you could start at your entry price at $19.85 and then add every, 60 cents, and it'll get you right up to here with two ads at $20.54.